Hey everyone, welcome to today's live stream. It is Monday, February 5th, 2024. Hope you're doing great. Couple things to cover today. I wanted to bring to your attention a few things actually that I think are relevant to what's going on in the market and important for investors to know. Today the market is off a bit. We're looking at the Dow down. It's come off its lows. It was down 400 points earlier. So there's a little bit of a bounce back. Silver is down, and it's kind of surprising that silver drops 1.6% when there's economic uncertainty. Silver and gold should work as a hedge against the market. And if the market was declining, the market has been declining today. In my opinion, silver and gold should be going up. I think it's just a real indicator of exactly how manipulated and controlled silver and gold is. So, we've got a kind of a skittish market here. The announcement of the Fed last week of saying, we're not cutting rates. It's not even on our radar anytime soon. Didn't come as a surprise to me. I was thinking toward the second half of the year or even later, fourth quarter of this year, there would be a potential for a rate cut. So this is becoming an interesting environment in terms of being an investor, because we're seeing certain stocks perform really well, like off the charts well, especially when it comes to their earnings. And as long as their earnings are on target and the forecasted following quarter is looking good, then great. Things tend to go well. Last week was Meta stock. Performed really, really well. And now we're starting to see some stocks performing this week well because of cuts in employees. What's the name of that? It's a makeup company that the stock is up. Let me find it for you. Estee Lauder. Ticker symbol is EL, and the Estee Lauder company. Well, I guess they do more than makeup, right? But look at the stock, up 12% today. And the only reason it's up is because they've announced layoffs. So we're going to see that more and more, where companies are laying off and somehow, some way, the stock goes up. Now, we know that layoffs are actually good for a company, right? Keeps expenses low. It's an immediate cost savings to the company, but they don't normally go up 12% based on news like that. So I don't know what's going on with Estee Lauder, but I think that we're going to see this more and more, where companies are laying off workers. So this is layoffs.fyi, and interesting to follow. Snap is laying off. That's Snapchat, right? 500 people. And then you can just kind of peruse the list to see. Zoom, 150 people. Just go through. PayPal, 2,500 people. Block is Square, right? The formerly known as Square data credit card processing company, 1,000 people. But you can just go through the list. Salesforce, 700. Microsoft, 1,900. And these are all announced so far this year. let's see, just for fun, let's see what total 2023. 1,190 tech companies with layoffs of 262,000 employees. It's fascinating, because these layoffs continue at a rapid pace, right? So, and then already this year, 32,496 layoffs. If that just stays the same, what does that get us? Almost 400,000, 384,000 people for the year. If this just stays the same, that's a huge number. I think that actually compares to 2021 with layoffs was nearly 500,000 people. And yet the economy, if you look at what is stated on in some of the news articles, that the economy added so many new jobs. That happened last week. It's why there was a huge return in the markets. So I guess what I'm saying is be very selective with this market. There may be some great companies to look at, especially with layoffs coming up and layoffs being announced, because that is going to be accreted right to that company's bottom line. Super helpful when it comes to earnings reporting. So, I hate to say it, like maybe these companies are realizing, they're trimming the fat, too many workers. Maybe there's redundancy if there were some recent acquisitions made. Who knows? We don't know exactly why these companies are doing this, but an important factor to look at nonetheless. Okay, so that's Estee Lauder Corporation, however you say that, and interesting, just an interesting thing. Also want to point out, we just sent out an email to you this morning. We would love your feedback. We're actually considering doing away with the guidance recommended under the North Star ranking. We know how important it is to get this right, and I don't know, but I also don't know, we don't know if it's important to you as a subscriber. So please give us feedback, email me, tell me in the notes section of the comment section for this week's live stream. Hey, is it something that you follow, that you watch closely? Can you live without it? Would you be disappointed if it totally went away? Or tell us, what else you'd want to see with the software. What would really make an impact for you? We'd love to know. Recently, we added this great section, which is the options view. So we have the calls, the puts, and the straddles. The straddles is, when you initiate a call and a put all at the same time, so that you're covered if the stock goes up or down. A very effective way to cover your hedge your stock position. Take a look. We've got the expiry in the middle column there, and strike price in the middle. So if you follow options, you know how this works. If you don't, we have a great course to learn. It's our learning portal at learning.sterlingstockpicker.com, and up will pop, if you click investing to search courses for investing, we've got a options 101, learning the basics of calls and puts. It's 5 or 6 hours of learning, and I created it in a way that will really help you follow along, stay engaged with the content, and really learn how to do this, because there's a lot of money that can be made with covered call writing, with leaps. Puts gives you a hedge if your stock goes down. And then we added some bonus content. So check that out. I think you'll enjoy it. I was playing with the Magic Stock Selector, and I hit the button, and it came up with this company, Cipher Pharmaceuticals. It is a Toronto-based company. So if you're in Canada, this might be something that you would want to take a look at. We've got 5 stars on it, buy rated, and MFI in the sweet spot. So this could be a fantastic buy for you. And lastly, I want to talk about this news article that could be an issue. Commercial real estate, a manageable problem, but some banks will close. So, ever since there was a work at home mandate with COVID, the commercial real estate space has really suffered because companies are now realizing that they don't have to go back into their space. People can continue to work from home. Most companies have set up a split for that, like working 3 days a week working from home, 2 working at the office. And anyway, it's just created this interesting dynamic that it's going to affect banks. I've been saying for a while now, stay out of the banks, especially these regional, small community banks. Those are the ones that are mostly invested in commercial real estate. They have a mandate to invest in their local community, and their balance sheet could suffer because of it. There's also legislation floating around for reduced late fee charges for bank members. That's a very interesting thing, because if you've ever bounced a check or were late on something, a bank can charge anywhere from $28 to $40 for that one bounce check or that one late fee, and it's a huge revenue source for banks. So now legislation is being floated that that's going to be reduced down to like $8 to $14. There's a range, they haven't landed on it yet, but that is a huge reduction in revenue for banks going forward. I mean, it's fantastic for individuals, but not so great for the banks themselves. So anyway, there's just a few things coming up here to keep your eye on. Now might be a good time if you have profits in bank stocks that you move that money out of bank stocks, especially these regional banks. Very important. New York Community Bank Corp down 7.53% today. That's a big hit. So yeah, check it out. Look through your portfolio, see if you have, here's a regional banking ETF down slightly today. But if you have individual bank shares, take a look and see how they're affected or if they are. And then the other big news item is March 11th of 2024, this year, companies that are have I want to say employees that are subcontractors, they are now having to list them as full-time employees. This is going to affect a lot of industries, a lot of things that isn't the most positive. There you are. So I just wanted to draw to your attention that there's a lot of new laws and legislation coming down that can very much impact companies. So start looking at, are you an investor in some of these? DoorDash is one of them, Uber, really going to make an impact on the finances of businesses. So costs are going to go up, and that's going to be obviously passed down to the user of that service. Anyway, that's all I've got for you today. Have a fantastic week, and I'll see you next week. Bye for now.